Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In previous class we have solved a problem on adjustment of capitals. Now let me take up one more problem on that is adjustment of capitals. Page number 44. Problem number 1616. Let me read the problem and let me analyze the problem and then we'll solve the problem. Gauri and Ganesh are partners in a firm sharing profits equally. Ratio is given. Equally means 1:1, 1/2 is to 1/2. Following is the balance sheet as on 31st March 2017. Creditors, bills payable. No problem with this. General reserve is accumulated reserve should be transferred to old partners capital accounts only in their old profit sharing ratio. Remember, so we have to credit it to partners capital account by reserve, by general reserve, old ratio 1:1. Then capital balance is given, that is a starting point of capital account by balance brought down. Cash in hand, so we have to pass all cash entries, not bank entries. Remember, stock, buildings, debtors, there is a provision, furniture, patents, plant and machinery. Patents we have dealt with in the previous problem. On 1/4/2017, Shiva is admitted into partnership on the following terms. Shiva should bring rupees 25,000 as capital. So cash account debtor to Shiva's capital account by cash account. On the credit side of capital account of Shiva, we have to enter the amount. Goodwill of the firm is valued at rupees 16,000. Goodwill is valued. That means third method, we have to show goodwill in the balance sheet. We have to create goodwill. Correct. That is goodwill account debtor to old partners capital account on the credit side of partners capital account by goodwill old ratio. Remember. Then stock is to be increased by 8%. Increased by 8%, that is we have to calculate 8% of the total value of stock that should be entered on the credit side of revaluation account because there is increase in the value of stock. Don't write appreciation, it is increase, that's all. So write it on the credit side of revaluation account and add it to stock in the new balance sheet. Provision for doubtful debts is increased to rupees 2,600. 2,600. So PDD should be increased to. Remember the word, see the word increased to means this is the final PDD. How much was PDD in the balance sheet? 1,500. Now they told us to increase it to 2,600. So 1,100, that is 2,600 minus 1,500. 1,100 excess PDD should be debited to revaluation account because that is the amount which is increased in the value of PDD. To that extent, the asset value decreases, debtors value decreases. In new balance sheet, debtors inner column less PDD 2,600. Remember, not 1,500 plus 2,600. No, because it is 2. Final PDD is 2,600. So deduct that amount from the debtors in the balance sheet, new balance sheet. Then provision for doubtful debts is increased to rupees 2,600, already done. Capital accounts of partners to be adjusted in their new profit sharing ratio of 3:2:1. New ratio of the partners is given based on Shiva's capital adjustments to be made in cash. So what we have to do is Shiva's capital, how much Shiva is bringing? 25,000, right, towards capital. So for 1 by 6 share, 3 plus 2 plus 1, so 6. 1 by 6 share, he is bringing 25,000. So the total capital of the firm is to be calculated, that is 6 by 1 into 25,000. You will get the total capital of the firm, and on the basis of that, on the basis of the new ratio, you have to calculate how much is the share of each partner in new capital of the firm. That should be carried down first, then we have to move further. That is what we have to do. And adjustment should be done in cash, they told. So by cash or to cash. By cash, deficit brought in, to cash, excess paid. Very simple. That is what we have to do. Let us prepare, let us solve the problem. Revaluation account. Revaluation account. Draw the columns, debit, credit, particulars, amount in rupees, particulars, amount in rupees. You can add JF column. Better to add JF column here itself, so that in examination you will automatically draw it. You will not, you need not have to spend much of your time, just maybe 10 seconds enough to draw 2 lines. Correct. So now first one is by stock, there is increase on the credit side. By stock account, increase in the value of stock. How much is the amount? 25,000. The value of stock was 25,000 into 8%, right? 8%. So how much it will be? 2,000. 2,000. Then anything else? There is PDD, increase in PDD, provision for doubtful debts. Doubtful debts account. Provision for doubtful debts account, that is 2,600 minus 1,500. So it will be 1,100. 1,100. Now find out the difference, that is 900. Total is 2,000. 900 is the difference. Distribute it among the partners, old partners only, to old partners capital account. Capital accounts. Under that, Gauri and Ganesh, right? Gauri and Ganesh. How much? What was their ratio? That is 1 by 2. It is mentioned in the problem. They share profits and losses equally. Yes, it is. It's given. So 1 by 2, 900 into 1 by 2, 900 into 1 by 2 is equal to 450. Is equal to 450. So profit on revaluation, balancing figure. Profit on revaluation, balancing figure, 450 each to both the partners. Your revaluation account is done. Now let us move on to the next part, that is combined capital accounts of partners. Remember, you may be having a doubt. If we prepare individual capital accounts, whether it is wrong. No, it is not wrong. But you have to draw columns for 3 accounts, 3 separate accounts. So it is a waste of your time. So we are preparing combined capital accounts. Otherwise what happens? You have to make entries by balance brought down. One sentence is enough here. But there in 3 accounts you have to write by balance brought down, isn't it? Then you have to write in third partner's capital account by cash or bank account. Then general reserve you will write, suppose here also again general reserve, again general reserve, in the new partners it will not come. So like that you have to write each sentence twice or thrice. So it is a waste of your time. So we are preparing like this. But if you prepare individually, it is not wrong at all. Remember. Yes. Then combined capital accounts of partners. By balance brought down, I told starting point is by balance brought down, that is opening balance of capital account. How much it is? 80 and 40. 80,000 and 40,000. Then by general reserve, old ratio 1:1. Correct. 6,000 is there, so 3,000 each. 3,000 each to old partners. Then what else? There is the revaluation profit. Credit it. Revaluation account. Profit. How much? 450 each. 450 each. Then cash account. New partner brings in cash towards capital. Introduced. Capital introduced. How much? 25,000. In new partners account, 25,000. Then isn't it? Yes, it is 25,000. Then anything else? Are there any other interests? No. On the credit side, there are no other interests. Move on to the debit side. There are no other entries. So now what we have to do is we have to find out the total capital of the firm first. So working note, calculation of note number 1. Calculation of capital of the firm. Calculation of capital of the firm. That is new firm. So for 1/6 share, was that new partner? Shiva brings rupees, how much? 25,000. 25,000. Therefore, total capital of the firm is how much? 6/1 into 25,000 is equal to rupees, how much? 1,50,000. Therefore, capital of Gauri in new firm is equal to 1,50,000 into 3/6 is equal to rupees 75,000, right? Therefore, capital of Ganesh in new firm is equal to 1,50,000 into 2 by 6 is equal to rupees 50,000. Therefore, capital of Shiva already given in the problem, right, is equal to 1,50,000 into 1 by 6 given in the problem, rupees 25,000. Now you have come to know how much capital should be there of each partner in the new firm. Now bring down that balance. To balance carried down. All other entries are over. So to balance carried down, note number 1. Note number 1. How much? 75, 50 and 25. Now find out the difference. That's all. See which side is greater. Better to leave one line. Leave one line here. There may be entry. And then write the total. $25,000. No change here as it is. Ganesh here 43,450, here 50,000. So there is a shortage. Ganesh should have 50,000 amount in his capital account, but he has lesser than that. So he should bring capital. So buy cash. This is a difference. Balancing figure. Deficit brought in by cash account. By cash account, balancing figure. Deficit brought in. Deficit brought in. Right in that. Right within bracket. How much it is? 6,550. 6,550. That is it is shortage. Refer Gauri's account. There is excess. 83,450. Credit side is greater. So 83,450. Find out the difference. How much? 83,450. 8,450. 8,450 to cash account. To cash account, excess paid. Excess paid. Balancing figure. Balancing figure. Now, that's all. Bring down the balance. By balance, brought down. By balance, brought down. How much? 75,000, 50,000 and 25,000. 25,000. So this is what the capital account is. How you have to solve a problem whenever capital adjustment is there. Now let us move on to the last part, balance sheet of Gauri, Ganesh and Shiva as on April 1st, 2017, I think, right? 2000, yes, it is 2017. Draw the balance sheet. Write the column headings. Liabilities, amount in rupees. Assets, amount in rupees. Assets, amount in rupees. Yes, now let us start with the most liquid one, cash in hand, right? Cash in hand. Cash in hand, within bracket, opening balance was 7,000. Add cash brought in by Shiva towards capital 25,000. Add it. Add cash brought in by Ganesh, shortage 6,550. 6,550 minus excess amount paid to Gauri 8,450. What is the final balance? 30,100. 30,100. Then stock 25,000. 25,000. Add appreciation at the rate of 8%. How much? 2,000. 2,000. So 27,000. 27,000. Then debtors, inner column, there is a change. Debtors 17,000. 17,000. There is a change minus PDD. PDD, it is clearly given in the problem. It is increased to, final figure is given. So write straight away that amount itself, 2,600. Deduct it. 14,400. 14,400. Then furniture, there is no change. Write it as it is, 14,500. Then plant and machinery, no change as it is. Plant and machinery. Don't write your account, stock account, furniture account, don't write that. Machinery account, don't write that. Plant and machinery, 18,000. Then buildings, how much it is? 40,000. Then intangible asset, patents. Now the liquidity order is also followed. Patents, no change. How much? 30,000. 30,000. That's all, no other assets. Then next part is creditors. Creditors. How much? 20,000. Creditors 20,000. And bills payable. How much? 4,000. Bills payable 4,000. That's all. No other liabilities other than capital. Refer the problem. Now, yes, here capitals capitals Gauri, Ganesh and Shiva. Write the final balance of capital. Final balance of capital. Yes. $75,000, $75,000, $50,000 and $25,000. 25,000. How much? 1,50,000. 1,50,000. 50,000. 1,50,000. So this is, write the total. Did you notice a mistake in capital account? Yes, we did a mistake. What is that? Yes, goodwill we didn't credit. I told you this is the third method. We have to create goodwill by debiting goodwill account debtor to old partners capital account in their old profit sharing ratio, right? So we didn't credit it. So credit goodwill here. That deficit brought in, erase that. Deficit brought in, there will not be deficit. When you credit goodwill in their old ratio 1:1, 1:1, 8,000 and 8,000, 1:1 old ratio. So goodwill 8,000 and 8,000. Delete that deficit entry and in that place write 8,000 and 8,000. Goodwill old ratio right here created. Then the total will be Gauri 91,450, 91,450 and Ganesh 51,450, 91,450 Ganesh and Gauri and Ganesh 51,450. Then write the same total on the other side, 91,450 in Gauri's column and 51,450 in Ganesh's column. Then what should be the difference? You already written the capital balances, that is correct. It is as per the ratio, it is correct. Now change this figure only, excess paid entry remains as it is, no change, only in figures. You write here 16,450 and 1,450. 16,450 and 1,450. That is the excess amount because total is 51,450 on the credit side. Here 50,000 amount required, excess amount 1,450 is paid. Here also 91,450 balance is there. We have to pay 75,000 should have been there in the capital balance. So excess amount 16,450 is paid. Now moving on to balance sheet. In cash, a small change. 7,000 opening balance plus 25,000 cash brought in by Shiva towards capital, add, then minus, you wrote add there, that is deficit brought in, no, delete that figure, minus 16,450. 16,450, that is excess amount paid, right? We have just calculated now. Minus 1,450. Minus 1,450. That is excess amount paid to Ganesh. So then ultimately cash balance will be 14,100. 14,100. Then all other remains as it is. Give one more asset. Write one more asset here. When we follow third method, when we create goodwill in the books of the firm, goodwill will appear in the balance sheet. I told you earlier, right? So goodwill 16,000. Goodwill 16,000. And capitals you already wrote. Gauri 75,000, Ganesh 50,000, Shiva 25,000. Creditors bills payable remains as it is, no change. Write the total. Balance sheet agrees. 1,74,000. Balance sheet total is 1,74,000. So your only cash balance changes to 14,100. That's all. Then here small change in capital account. I already told you this is how we have to solve a problem on admission of a partner whenever there is adjustment of capitals. Now, with this, your admission of a partner comes to an end. Almost all the problems were solved. Some problems, similar problems, I told you to do homework. I gave it for homework. So solve it. There will not be any problem because they are similar. Only figure and names being changed. That's all. No new things in those problems. I think we have solved almost 10 problems here in that's under 12 marks problem, right? Yes. So we'll take up retirement of a partner in the next class. Retirement of a partner, a new chapter. New chapter it is. It's under reconstitution of firm itself. New chapter, that is retirement of a partner. Retirement and death. Death I will take up separately as a new chapter. It is included under retirement itself in your NCERT syllabus. That is a book. But I will take up that as a separate chapter. Death of a partner. Small chapter it is. We need not have to prepare evaluation account, combined capital accounts, balance sheet. Simply we have to prepare either capital account or executor's account of the deceased partner. That's all. Not all the partners. Very small chapter it is. So with this, our admission of a partner comes to an end. Take assignment problem. Solve this problem. Same problem. That is a Gauri, Ganesh and Shiva problem, and submit it on time. Thank you for watching this video. Thank you.